Euro to US dollar price prediction. Bulls target 1.1800 as dollar weakens. ECB and trade war update. The euro to US dollar exchange rate has surged past 1.1740, driven by a weakening US dollar as risk appetite grows. But here's where it gets controversial. The European Central Bank's, ECB, upcoming decision on July 24th could shake things up. Euro to US dollar is holding strong above the 20-day simple moving average, SMA, of 1.1704, with gains exceeding 0.5%. This surge comes despite lingering fears that the European Union, EU, and the United States, US, might not reach a trade agreement by the August 1st deadline. The pair has hit a daily high of 1.1747 after dipping to a low of 1.1678. The financial markets have been relatively stable over the past 24 hours. U.S. equities ended the session on a mixed note, with trade news from the U.S. grabbing headlines. While the U.S. announced a deal with the Philippines, there has been no significant progress with the EU. U.S. Treasury Secretary Scott Bessent emphasized that the White House is more focused on the quality of trade deals rather than their timing. When asked about extending the deadline, he deferred the decision to President Donald Trump. Meanwhile, EU leaders are set to meet with their Japanese and Chinese counterparts this week. Discussions will center on defense and trade cooperation with Japan, though hopes for substantial talks in Beijing are limited. Traders are closely watching the ECB's monetary policy decision on July 24th. The central bank is expected to keep rates unchanged as inflation nears its target and trade risks persist. This week, the EU's economic docket includes consumer confidence, flash PMIs for July, and the ECB's monetary policy decision. Across the Atlantic, the U.S. will release housing data, S&P Global flash PMIs, initial jobless claims, and durable goods orders. Daily Digest market movers. Euro to US dollar climbs on broad USD weakness. The US dollar index, DXY, which tracks the buck's value against a basket of 6 currencies, has dropped 0.46% to 97.39, boosting the euro's advance. Last week's U.S. economic data presented a mixed picture. While consumer sentiment improved, inflation accelerated in June, with the Consumer Price Index, CPI, nearing the 3% mark. The Producer Price Index, PPI, showed some signs of easing, but a robust retail sales report highlighted the resilience of American consumers despite rising prices. Some EU diplomats have hinted that the bloc is considering retaliatory measures against the U.S. if an agreement fails to materialize. These measures include digital services, aerospace products, and bourbon, though they wouldn't fully offset the impact of the 30% tariff rate threatened by President Donald Trump. The odds of the ECB keeping rates unchanged at the July 24th meeting are 57.5%. with a modest chance of a 0.25 percentage point cut at 42.5%. Notably, the odds of a cut have increased from 37.5% just a day ago. Technical outlook: Euro to US dollar poised to test 1.1800 in the near term. The uptrend has resumed after 2 consecutive days of gains, clearing the 20-day simple moving average, SMA, at 1.1709. Momentum is favoring buyers, as indicated by the Relative Strength Index, RSI, which has jumped from around its neutral level towards the 60 mark. If the euro to US dollar climbs above 1.1750, expect a test of the 1.1800 figure ahead of the year-to-date high of 1.1829. Conversely, if the pair falls below 1.1700, further downside is anticipated. The first support level would be 1.1600, followed by the 50-day SMA at 1.1532, ahead of 1.1500. Euro FAQs. The euro is the official currency for the 19 European Union countries, that make up the Eurozone. It is the second most heavily traded currency globally, behind the US dollar. In 2022, it accounted for 31% of all foreign exchange transactions, with an average daily turnover exceeding $2.2 trillion. Euro to US dollar is the most heavily traded currency pair, accounting for an estimated 30% of all transactions, followed by euro to Japanese yen, 4%, euro to pound sterling, 3%, and euro to Australian dollar, 2%. The European Central Bank, ECB, in Frankfurt, Germany, serves as the reserve bank for the Eurozone. The ECB sets interest rates and manages monetary policy, with its primary mandate being to maintain price stability. This involves controlling inflation or stimulating growth. The ECB's primary tool is adjusting interest rates. Higher interest rates, or the expectation of higher rates, typically benefit the euro. The ECB Governing Council makes monetary policy decisions at meetings held 8 times a year. These decisions are made by heads of the Eurozone national banks and 6 permanent members, including the president of the ECB, Christine Lagarde. Eurozone inflation data, measured by the Harmonized Index of Consumer Prices, HICP, is crucial for the euro. If inflation rises more than expected, especially if it exceeds the ECB's 2% target, the ECB is obliged to raise interest rates to control it. Higher interest rates compared to other regions usually benefit the euro, making the region more attractive for global investors. Data releases gauging the health of the economy can impact the euro. Indicators such as GDP, manufacturing and services PMIs, employment, and consumer sentiment surveys can all influence the direction of the single currency. A strong economy attracts more foreign investment and may encourage the ECB to raise interest rates, directly strengthening the euro. Conversely, weak economic data typically leads to a fall in the euro. Economic data for the 4 largest economies in the Eurozone, Germany, France, Italy, and Spain, are particularly significant, as they account for 75% of the Eurozone's economy. Another key data release for the euro is the trade balance. This indicator measures the difference between what a country earns from its exports and what it spends on imports over a given period. If a country produces highly sought-after exports, its currency will gain value from the extra demand created by foreign buyers seeking to purchase these goods. Therefore, a positive net trade balance strengthens a currency, while a negative balance has the opposite effect. Information on these pages contains forward-looking statements that involve risks and uncertainties. Markets and instruments profiled on this page are for informational purposes only, and should not be construed as a recommendation to buy or sell in these assets. You should conduct thorough research before making any investment decisions. FX Street does not guarantee that this information is free from mistakes, errors, or material misstatements, nor does it guarantee that this information is timely. Investing in open markets involves significant risk, including the loss of all or a portion of your investment, as well as emotional distress. All risks, losses, and costs associated with investing, including total loss of principal, are your responsibility. The views and opinions expressed in this article are those of the authors, and do not necessarily reflect the official policy or position of FX Street nor its advertisers. The author will not be held responsible for information found at the end of links posted on this page. If not otherwise explicitly mentioned in the body of the article, at the time of writing, the author has no position in any stock mentioned in this article, and no business relationship with any company mentioned. The author has not received compensation for writing this article, other than from FX Street. FX Street and the author do not provide personalized recommendations. The author makes no representations as to the accuracy, completeness, or suitability of this information. FX Street and the author will not be liable for any errors, omissions, or any losses, injuries, or damages arising from this information and its display or use. Errors and omissions accepted. The author and FX Street are not registered in EURUSD Forecast Update, July 22, 2025. Trading Signals and Analysis. The euro to US dollar forecast just took an intriguing turn. After shedding its overbought signals, this major currency pair is now showing signs of a potential upward surge that's captivating traders worldwide. But here's where it gets controversial. Despite a solid bounce back by technical indicators, some experts argue the rally might not be as strong as it seems. Let's dive into the details. On July 22, 2025, the euro to US dollar price climbed during the intraday session after successfully cooling off from previously overextended conditions identified on the Relative Strength Index, RSI. This easing opened the door for further upward momentum, especially as the pair broke above a key bearish correction trend line in the short term. Importantly, euro to US dollar is trading above its 50-day exponential moving average, EMA 50, which acts like a dynamic support level, helping to fuel a prevailing bullish trend. Simply put, the EMA 50 is often seen by traders as a barometer of market sentiment. Staying above it suggests buyers are in control. What does this mean for traders? It signals that more price advances could be on the horizon, yet volatility remains a factor, and market watchers should stay alert. This pattern illustrates how technical tools like RSI and EMA can combine to provide clearer insights into price movements. For those seeking precise trading guidance, BestTradingSignal.com stands out by offering highly accurate signals tailored for major markets, including U.S. stocks, cryptocurrencies, and Forex. Subscribers receive real-time alerts directly through Telegram from a seasoned expert team. Plans start at €44 per month for stock signals, while crypto and Forex signals begin at €49 per month. There's also a VIP package starting at €179 monthly, providing an all-in-one solution covering assets like gold, oil, Bitcoin, Ethereum, and indices. The longer you subscribe, the greater the discounts available, boosting value for persistent traders. Curious about their track record? Check out the detailed performance results for the week of July 14th to 18th, 2025 on their website. Shifting gears, the Canadian dollar and Swiss franc pair, Canadian dollar to Swiss franc, is facing downward pressure today amid persistent bearish trends. On July 22, 2025, the Canadian dollar to Swiss franc fell during intraday trading due to a short-term downward correction trend dominating price action. It continues to trade beneath the EMA 50, reinforcing the negative momentum. Meanwhile, the RSI remains in bearish territory, even after hitting oversold levels, a signal that suggests the downward force might persist rather than bounce back imminently. Analysts anticipate further price drops if resistance around 0.5835 holds firm, aiming next for key support at 0.5820. Today's expected trading range for Canadian dollar to Swiss franc sits between these levels, underlining a cautious outlook for traders betting on a decline. Meanwhile, the euro to Japanese yen pair showed resilience by extending gains in its recent intraday activity. Undoing prior oversold conditions flagged by the RSI, the pair leveraged support from trading above its EMA 50, which strengthened its bullish short-term trend. Holding above 172.25 is crucial for this momentum to continue, potentially pushing the price toward the important resistance level at 173.25. The day's trading range is forecasted between 171.85 and 173.25, signaling optimism for those favoring a bullish stance. Over in the pound sterling to Japanese yen market, efforts to shake off lingering bearish sentiment appear to be gaining ground. The pair rose intraday after bouncing from a minor bullish trend line and shaking off oversold RSI readings. If it can maintain support near 198.70, pound sterling to Japanese yen may target resistance around 199.80, marking a potential full recovery from previous negative pressure. Today's predicted range is 198.75 to 199.80, highlighting fresh bullish opportunities. But here's the catch, and the part many traders overlook. While technical indicators support these moves, broader macroeconomic factors or unexpected news events could quickly reverse trends. How much should traders rely solely on these signals? Could overemphasis on technical patterns cloud judgment in volatile conditions? For those interested in navigating these complex markets with expert assistance, BestTradingSignal.com continues to deliver high-accuracy trading signals. Subscriptions unlock comprehensive market coverage and hands-on support, ideal for traders looking to sharpen their edge. Wondering about the exact euro to US dollar rate right now? As of July 23, 2025, for 55 a.m. Universal Time Coordinated, the pair is priced at $1.1735. So what do you think? Are technical signals the best compass for today's markets, or should fundamental analysis play a bigger role? Share your thoughts and join the conversation below, because in Forex, every perspective counts. Euro to US dollar extends losses. Can bulls step in? Euro to US dollar technical analysis. The euro to US dollar pair is facing a challenging situation, with bears taking control. A downward trend has emerged, and the question on everyone's mind is, can the bulls make a comeback? The bearish momentum. Euro to US dollar encountered resistance at the 1.1820 level, and has since been on a downward trajectory. Breaking below the 1.1780 and 1.1720 support levels, the pair settled beneath the 1.1720 zone and the 100 simple moving average, SMA. However, there's a glimmer of hope for the bulls as the pair managed to stay above the 200 SMA. Immediate support is found near the 1.1600 level and the 200 SMA. If the pair continues its descent, the next key support level is at 1.1575, and further losses could push it towards the 1.1520 zone. Resistance and trend lines. On the upside, the pair faces resistance at 1.1660, with a key bearish trend line forming on the 4-hour chart. This trend line acts as a significant barrier, with its resistance at 1.1660. The next key resistance level is near 1.1720. A close above this level could signal a potential reversal and a fresh increase. If the bulls manage to push through, the pair could target the 1.1780 resistance level, and a further breakthrough could lead to a significant rally towards the 1.1820 resistance zone. GBP/USD and US dollar to Japanese yen insights. Pound sterling to US dollar is showing signs of weakness below the 1.3500 level, struggling to initiate a fresh uptrend. Meanwhile, US dollar to Japanese yen is poised for potential gains above the 149.20 resistance. Economic events to watch. Keep an eye on the Bank of Canada Business Outlook Survey for potential market-moving news. And here's where it gets interesting. Can the bulls step in and reverse the trend? Or will the bears continue to dominate? Share your thoughts and predictions in the comments. Disclaimer. This analysis is for informational purposes only and should not be considered financial advice. Trading involves risks, and individual strategies may vary.